What's good, YouTube? Welcome back to my video. Today I'm going to be talking to you guys about LOTZ. LOTZ is a growth company. They have merged not too long ago, but since the merger the stock has been dropping, and this stock is definitely a growth stock. I have a big news about the stock that dropped last night, which I'm going to share with you guys. Then I'm going to go over basically the company, what they do, and talk about pretty much like the DD of the company. Before we get started, if you could please leave a like and subscribe. So let's get started. So in regards to LOTZ, this company right here has merged recently, and since all this GME, AMC, and all this other hype with WallStreetBets, it has literally taken a huge dip on the stock because everyone started selling out of the stock in order to purchase all the other stocks on WallStreetBet. So this stock has kind of been forgotten about and has dipped quite a lot, and it has a lot of growth opportunities. So the market cap's only 1.16 billion. Now, CarLotz right here is basically a seller of brand new and used cars. So you could sell your own car, you could sell your car through them, or you could buy a car through them. So before I get into details about it, for the people that already know about this company and just want the news, basically, you could go on the SEC report and you pull up the lots, and there's a board of director named David R. Mitchell. So David Mitchell, right here, as you can see, he's a director. He owns more than 10%, officially owns more than 10% of the company. And as of the 21st, but it was reported last night. So on the 21st was the transaction date. He's gotten 20 million shares of this company, and he also has a right to earn this much if he accomplishes a certain amount of things. So I believe this is the breakdown right here. So the stock price has to hit a certain amount in order for him to get paid out the rest. So this is a good sign when people inside the company own their shares and they don't sell. Typically, when you see that, that's a really good sign. Now, there was another one, TRP Capital Partner LP. They're a 10% owner of the company, and they own 20 million shares of the company. And then they own another 1 million shares. So they will be getting an earnout rates of $2 million. And this will be dependent on the stock hitting $15. So that's right there. Then we have right here Thomas. He is the chief financial officer, and he's actually gotten the stock at $11.35. So as you can see, he purchased the stock at $11.35, and he's purchased 506,000 shares. So 506,167 times 1135, that's 5.7, over 5.7 billion. Sorry, 5.7 million. My apologies. So as you can see right now, the price is a lot cheaper than what the actual CFO purchased the stock for. And he does have potential to earn another 68,000 shares, but it'll be restricted, and that's based on his earnings and based on his performance. And then finally, we have the CEO, Michael, and he has 9.8 million shares. I don't know why I keep saying billion, but he has 9.8 million shares, plus he has the shared voting power. So in total, he has 11,801 shares, and he owns 10.1% of the company. So like I said, it's a good thing when insiders like the CFO, the CEO, etc. own their own shares, and you just gotta keep watching it. As long as they don't sell, it's a really good sign. And like I mentioned, they have opportunities to get more of the shares basically based on their performance. So they have to perform, and it's in their best interest to perform and to make as much money as they can for the company, which will and essentially make us money. And like I said, right here for the TRP Capital Partners, I believe they're the ones that helped out with the mergers, and they have an interest with to make sure that the stock hits $15 or more. So definitely, if you're purchasing at this price, you could maybe get like a 50% return, um, just in order for it to hit $15. So now let's start and get into the company. You definitely want to just check out their website, look into it. I'll do that in your own time. I've already went through the system. It looks pretty easy to use. If you want to find a car, you just go find my car. If you want to finance it, you want to pay it off in cash, it gives you the option, and you could pick your year, model, etc. And if you need customer service support, you could chat with them, or you could give them a call right here by going contact us and giving them a call, and these are their hours. So it's pretty easy to use, nothing too complicated. Now let's get into the DD of the company. So in regards to car lots, this is the investor presentation. You can find this on their website. Basically, what their goal is to buy, sell, trade, or co-sign for cars, whether it's online or in person. They're gonna give the opportunity to do both online and in person, or you could do both at the same exact time. So for example, if you want to go sign paperwork, so you want to do all the other stuff, you could definitely go ahead and do it online. You could even order a car, and they actually give you a 3-day warranty where you could test drive the car for up to 3 days, and if there's some issues with it, then you could return it for free and get yourself another car with them. So that's definitely a good sign in terms of purchasing it online. And they currently have over 25,000 vehicles sold, and this was as of October. They do sales in all 50 states, and they average about $1,000 in savings for the buyers and the sellers. Okay, so in regards to traditional cars, let's say you have a car and you want to go ahead and sell it. You could do multiple things. One, you could go ahead and go to the dealer, put in for a trade-in value. They're going to give you some cheap value, so the dealer could take that car and resell it for more. Typically, that's like what, if you're lazy or don't want to go through the process, what some people would do, but they'll take a loss in terms of the actual value of the car. For companies that own multiple cars, they could go through wholesalers, go to auction house, and then sell it through the auctions. You'll definitely get less money because it's through an auction. The other way would be by, if you have the car, meeting up with the buyer, the retail buyer, meeting up with them directly. And now there's a chance of, meeting up with them. If something happens, there's risks involved. You have to go through people lowballing you, etc. Right? So basically, what CarLotz does is they make everything easy for you. They simply just go ahead and you go ahead and tell them that you want to sell the car. You send them the car, they park it on their lot, and they go ahead and sell the car out to other people, and they make approximately $1,000 from each car sale. Now, what I like about this kind of method, that it's a strict based fee, is it doesn't matter whether you have a Honda Civic, a 2002 BMW, or a Lamborghini. At the end of the day, one car sale is $1,000 that they'll be earning. So for every car sale that they do make, they will be making money, and that there won't be any influences in terms of not selling your car, because at the end of the day, they're still going to make the same amount of dollars whether they sell your car or they sell a rich guy's Lamborghini. All right, so in terms of sellers, what they do is they say that typically it takes about 30 to 45 days to sell your cars, and they take care of everything. You don't have to worry about it. And actually on their website or on the app, you could track and see how many people tested your car, how many people were interested, if there was any offers. You could basically see all of that in real time, and you get all that data online from home, so you don't even have to really worry about it or call the dealer. Everything's updated like a tracker basically. Now on the website, you could go ahead and browse the cars. You could go ahead and view the pricing. You could test drive the cars. So you could go ahead and pick which location you want, test drive the car. Like I said, there's a 3-day and a 500 vehicle program. So you can drive the car. If you purchase the car and you actually don't test drive it in person and you want to just purchase it online, you could go ahead and test drive it for 3 days. If after 3 days you realize there's something wrong with the car or you just don't like it and you want a different car, then you could return it and you could go ahead and return it and they'll give you your money back. Okay. Then there's financing and warranties. So they will also make money off financing. They obviously have their own banks or loan officers that they deal with and they make a commission off of that as well. And then there's going to be the checkout, which when you purchase the door and they deliver your car for you. So now they could pick up and deliver your car for you, whether you're buying or selling, as long as you live 150 miles away from the nearest car lot. If you live further than that, after the 150th mile, so 151 and further, they'll start charging you a fee per mile. But in terms of if you live in the area, then there is no shipping fee. They cover that for you. One thing I want to do mention, all their cars do get new oil. They all get oil changes and they get tested, make sure everything is good before they could go ahead and sell it to anyone. And another thing I wanted to mention is that they plan on releasing 3 to 4 hubs every single quarter. That means every single quarter, there's going to be 3 to 4 parking lots or lots that they're going to be, or locations that they're going to be doing, and they want to expand through all 50 states. Right now, they do sell for all 50 states, but there's that shipping fee involved, but they want to be able to head and have a location in all 50 states. So as you can imagine, they're literally going to be growing 12 to 16 of their lots a year. So as you can see right now, they have 8 hubs. In 1 year, they're going to have an additional 12 to 16. So these guys are going to be growing at a rapid pace. So this is why I'm saying this is definitely a growth stock and a stock you definitely want to get into at these cheap prices because you can't go wrong with it. So why buy or sell through car lots? For one, prices are typically cheaper than their competitors. They have full inventory and you could go ahead and even trade in with them, and everything is contactless. So if you want to do everything through customer service and through online, you could definitely do that. You don't have to physically go in and check all the cars and stuff like that. You could do everything online. For sellers, you typically get more money out of your return. So if you're going to go to a dealership and get $10,000 for a car that's worth 15,000, you could definitely go ahead and sell it with these guys for like $12 or $13 and still make an extra $3,000. They accept all car models, all ages, all values, etc. Like I said, there's just that one fee that they charge, and they have end-to-end technology and hassle-free. Now, in terms of customer satisfaction, the NPS value, they're rated at an 84, and if you look at the competitors, they're better than their competitors in terms of their NPS score, so how their customers are satisfied. Okay, and right here is going to be the management team. So we got the CEO. I've definitely looked into listening to some of his interviews. He's really well spoken. He knows what he's talking about. He used to be an investment banker. Then we have the Chief Operational Officer. He's worked in the auto industry for 20 years. And then you have the CFO who's worked for Brinks. So if you worked for like a huge financial firm, doing finance for a car company is going to be like, it's going to be like stealing candy out of a baby. You know, it's easy. It's going to be easy work compared to what you've seen at Brinks. So now in regards to the market, what the CEO did mention was that if you take the top 100 dealerships in the States, they only make up 6% of the whole used vehicle market. The used vehicle market is so big that anyone could get into and get a little piece of that pie. So what he was mentioning was that the average is 42 million sales of used vehicle a year, and If the economy is good, you might see that number go from 42 to 44, 45. If the economy is bad, like during COVID times and other recessions, you might see that number drop to 38, 39. But typically, it's anywhere between that 38 to 45 range, and it's pretty consistent. But what they want to do is they want to change the market and be able to change the e-commerce. So people are buying Teslas online, people are buying certain cars online. So they want to be able to sell you used cars with guaranteed satisfaction online as well. They want to kind of change how used cars are being sold. You no longer have to go to those dealerships. Now, in regards to the companies, these are their main three competitors. Like I mentioned, their market cap is hold on, 1.16. So as of right now, it's 1.16. Carvana is 39, Vroom is 6 billion, and Shift is 835 billion. So in terms of revenue growth, this is the average growth for the revenues. LOTZ is at 145, where as of today, these guys are 40, 65, and 92. So they're definitely, in terms of growth from 2020 to 23, you'll definitely see high growth. So gross profit per unit, this is for every car sold. They get 1866 versus their competitors 2602, 1468, and 1554. So they're second. But here's where the interesting part comes along. In terms of customer acquisition cost, theirs is only 315. It's definitely amazing to find a company that doesn't require that much capital to acquire their customers. So the margin at the end of the day is the most out of all four of them. And the capital they invested is a lot less than everyone else, but look at the footprint that you want to look into. So these are the locations that they have. They have the most, and then it goes, I believe it's Vroom, then LOTZ, but it's like a very small difference. But these guys are all concentrated in one area. So they want to go ahead and expand, where Shift is pretty much focusing on this side of United States. So in the future, you could definitely see LOTZ looking like this and spread out everywhere in all 50 states. Alright, so I've already went into all of this. The only thing that I want to mention, and this is a very important thing, in terms of investments, so you have Amazon. Amazon barely owns any products. So you have companies like Amazon, Alibaba, there's a lot of Airbnb, there's a lot of these companies, Facebook, all these companies, they don't own their own products. They literally use other people to sell through, like they use other people in order to sell whatever they're selling. So in this case, LOTZ is doing the same thing. They're taking a seller, taking their car, putting it in their lots, and selling it out to buyers. So they don't own the car. If the car doesn't sell, it doesn't hurt them financially. Sure, they won't make the money in terms of the sale, and you might have you might have a customer that's dissatisfied, but at the end of the day, they don't own any of their inventory. None of it belongs to them. So there's very little risk of bankruptcy at all. Even if the economy turns and they're not making money, there's very little risk of bankruptcy versus other companies where they actually own their own cars and they own their own inventory. Alright, so LOTZ focuses on 3 years to 10-year-old cars. Those are their main used cars that they purchase or that they have on their website. You could definitely find other cars, but the reason why they go for these cars mostly is because these cars stop dropping in value at an exponential rate. So their value doesn't drop as much compared to a brand new car. When you first take it off the lot, boom, 20% is gone. So between 3 years to 10 years, the value is pretty much the same. Like not the same, but it goes down, but not as much. So that's why they want to be able to purchase these cars so they could resell. It'll be easier to resell essentially, and not have to worry about the value of the car going down too much. Alright, so that's pretty much it. As you can see, they like to focus on older cars compared to the competitors. So now in terms of earnings, 2020, they were expected to make $110 million in revenue. 2021, 356. So as you could see, it literally triples. Then it goes ahead and triples again to 945, and then it goes ahead and almost doubles to in 2023. So there's really high revenue growth. If these guys can meet these growth, you could definitely see the stock price rising up. And this right here is pretty much in terms of the revenue, what I mentioned, their gross profit, and the total retail vehicle sales that they plan on having each of these years. All right, so then we have here what they want to also do is they're targeting rental companies, they're targeting major companies, banks, equipment manufacturing companies, finance companies, third-party remakers, and they want to go ahead and target these companies to be able to resell a bulk load of their cars. So typically with car rental companies, after 2 to 3 years, they want to go ahead and sell the car for cheap, and they want to resell it because they want to keep their inventory brand new. So instead of them selling it for cheap, they could go ahead and sell it with car lots and get a higher dollar value and not even have to worry about doing the sale themselves. So if they could target these type of companies, they could definitely make a lot of money. And then this is pretty much the performance. So the year-over-year growth, I've gone over it pretty much already, but this is from quarter to quarter. So basically comparing quarter 2 of 2020 to quarter 2 of 2019, this has been the growth, and same thing for quarter 3 and quarter 4. All right, so in terms of growth and profitability, as of right now, they have 145% growth and profitability, and compare that to, so this is for the growth, compare that to their competitors, and then what they expect to have in profits during the years 2020 to 2023. This is their profit growth versus their competitors. And then you have here the gross profit margins. So their margins aren't the best. They're slightly above average, so that means 13.6. They're just over Vroom, but below these two right here. This isn't technically a bad thing or a good thing. Their margins are not bad. They're not the best, obviously, compared to their competitors, but they're very competitive. And at the end of the day, they're taking very little risk compared to their competitors. All right, and then this is the valuation of the stock compared to the competitors. So the 2022 revenue, these guys are trading at 3.75 of their revenue, while CarLotz is only trading at 0.88 times the revenue. So once they notice how good this company is, you could definitely start seeing this stock start rising and trading at like a 1 or 1.5 or even up to 1.86 times the revenue of 2022. Right now, it's trading at 10.53. Personally, myself, I'm trying to purchase the stock below 10.50. If I could purchase below 10.50, then I pretty much made a really good purchase at a really good price, considering that, was it the CFO got the stock at 11.35. So, and they do need the stock to hit 15 in order to get a payout. So even if it does hit 15, I make a 50% return. If I want to sell and buy back later, I could definitely do that. But this is definitely a stock I'm going to be purchasing today. If you do guys have any questions, leave it down in the comments and I'll definitely get back to you guys. Easy.